Good morning, everybody, and welcome to this episode of Derek Invests. I'm your host, Derek Miller. What we're going to do today, there's a lot of opportunity in futures. Okay, there's a lot of opportunity in options as well. I prefer futures over options. Everybody is different. But what I can tell you is the reason I prefer futures is because futures flow just like the stock market does at a much higher speed and with a lot more leverage. Now, what that means to most people when they hear it is that they can make a lot more money faster, right? That's accurate. And it's also accurate that you can lose a lot more money than you even have. So, when it comes to futures, the most important thing is that you understand the flow of the stock market. If you look at the stock market on a daily basis and you're not sure where it's going or where it's heading or what's going on, futures are not for you yet. And that's why I'm going to do this. This is going to be a free lesson in how you look at different levels, how you look at volume, and we're going to do it in a very slow speed because a monthly chart and a 1 minute chart are exactly the same. They will have the same flow. One will have it much quicker, one will have it much slower. You have to learn slow, right? I never met a baby who jumped up and started sprinting across the living room. First, he wobbled and held on to things. Then he crawled and then eventually got to his feet. And then it was one step and two steps. And if you think you can rush into investing and trading, whether it's just the stock market or whether it's the futures market, by just wind sprinting, you're just giving your money away. It's so lesson. I want you all to remember something. I have a very firm opinion that every single person that is going to try to trade or invest their own money should first do one-on-one sessions with someone, learn and set up their own parameters, their personal parameters. How much risk can they take? What time frame should they be working in? And what investments should they be working in? I'm putting this out there for educational purposes because you should know how this stuff works. But if you haven't done that with someone, if you think, wow, that's too much, I'm not going to pay someone that much to teach me, well, I assure you, you're going to pay a lot more than that in losses. You have to do that, plain and simple. But let's learn a little bit about this. Let's learn about some levels in the futures market because it's faster, right? You're still reading the same stuff, but it's quicker. So I'm going to jump over. We're not going to look at futures. I'm not even going to let you watch all those ticks and how quickly it moves and how quickly I reposition and how I adjust my risk. That's just confusing. Let's start off with where you should start. And I don't care if you're an experienced trader or investor revisiting this stuff. I revisit it daily. All right, let's start. Let's start with what good habits should you have. Now, there's a couple different futures that you could trade, right? You could trade in different markets. What I think is best for someone starting out is the Dow E-mini. Why? It costs a point. That's why. So $5 every time there's a tick, right? In either direction. If you're buying and it goes up, you made $5. If you're buying and it goes down, you lose $5. All right. If you go over to the S&P 500, now you're talking about $50 a tick. All right. So it's a lot more money. It's a lot more risk. You have to stay a lot tighter and you have a lot more money. And you should not be starting there. You should be starting with the Dow. So let's take a look. This is a monthly chart. Now, I don't care if it's a monthly chart or a daily chart or a minute chart or a 5-minute chart or whatever. And I'm going to break down from those places. But I don't care which one of those it is. You're going to have the same flows. Okay. Now, let me show you what I mean by that. So we look in the background here. We're trying to figure out, is what's going on right now a big deal? So this is a monthly chart. So what this is going to tell us is if we're experiencing some sort of economic event. Okay. This is back in 2008, 2009. This was the trading activity that was necessary to create an economic event. We had volume at this level. Okay. And you could see the levels previous to it. Boom, 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 boom. All right. This was average volume back here before anything had really kicked off. So this was your average volume. Probably still is your average volume. TradingView, try any of their plans free for 30 days. $12.95 a month, $24.95 a month, or $49.95 a month. Let's just throw that out there because TradingView, I love their software. I'm not logged in, and because I like to trade futures through NinjaTrader, just my preference for now at least. Okay, but I like to give them a shout out because they do have fantastic software. I'm using it right now in front of you. So what we want to look at is what's going on now. Do we have an economic event going on now? Well, trading activity is the greatest way to know when you have an actual economic event. That is how those of us in the know were well aware in 2020 that it was not the event it was told it was going to be. Because if you look, the smartest people in the world weren't scared. They weren't selling everything. It was just the news that got retail, the average investor, the average trader scared. And you can see it right there. I mean, 2020, as far as trading volume, isn't much higher than January of 22, which this was a lot of selling. So they were both just a tremendous amount of selling. But in 2020, there was a tremendous amount of buying by guys like me as well. In January of 22, that was not the case. We were selling while retail just thought we were on a traditional dip. In December of 2021, during the holiday season, trading activity kicked up to about 500%. So we knew right here that we were heading into a correction or bear market. All right, so let's look at now. Is there anything to be fearful of now in the long term? No, there's not. Is it important to know that? Yes, it is, because believe me, when you're playing tick by tick, minute by minute, you are going to scare yourself. You're going to start seeing that 1 minute chart like it is it's a world event instead of what it really is, which is a very small move. All right, you'll start viewing it that way. So you need to get this stuff into your head. Do we have a major event going on right now? Is all of your money going to disappear? No. Let's go down to a weekly chart. And this, again, is very, very important for the same exact reason. Actually, let's go back to that monthly one more time. I want to show you something on levels. So when you'll hear someone who trades futures, people that trade options, anybody who's active, when you hear them talking, they're always going to talk about levels, okay? And you'll see that I'll show it to you over and over on this chart. So whenever you have, let's go back. Let's go here, okay? Whenever you have a breakout, so a breakout from to a new high, you should retest that. So let's just start making some lines, okay? This is a breakout. It comes back to retest. This is another breakout. It comes back to retest. Now, breakouts that are bad are breakouts that are not retested. This is a breakout. It effectively is retested. This is a breakout. Now, what you're going to say to yourself is, well, here it's retested. Okay, fair enough. This tiny breakout is retested, but look at what has happened to the volume on that retest. You have gone from an average volume of, let's just eyeball it. Everything is notional, folks. We don't need to know the exact numbers. This is your average volume during the breakout. Your volume has now spiked on the retest to here, okay? That's double or triple. This is not a retest. This is the beginning of a massive bear market. If anyone tells you that they couldn't see the bear market coming, and let me tell you when you really should have seen it, you really should have seen it right here. This is even a giveaway. It was actually a giveaway in May of 07. It just was. But if you move forward and you were the most conservative guy in the world, August of 07 was definitely a dead giveaway. All right. But, nobody saw it coming, right? Only a wizard saw that coming. No. So here we have all these levels retested, right? Now, what else happens? When a price level, this was a retest, right? When the price level drops, if it's going to be a real bear market, it's going to drop, retest, drop, retest, drop, retest. It didn't. It just kept plummeting. Why? Because the financiers knew they could take advantage of retail. They knew they were afraid enough. Now, is there in fact a retest, everybody? There sure is. It's right here. How long did it take? This is October of 08. That's October of 09. It took an entire year. And guess what? It came up and retested, pulled back down, took off. Retest. Look. That's a new high. We're going to fade up. That's a new high. I guess you could say this one. That's a new high. So on your way up, break to a new high, retest, 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 break to a new high. There's no retest. Keeps going. Guess what? Retest, break to a new high, and it's going to go on and on. Now look at this. This was a new high, wasn't it? And guess what? It didn't retest, but guess what? Yes, it did. These are the levels we're talking about, guys. Now, I'm doing this on a monthly chart. This is not an effort to make you understand how retesting occurs. This is more or less an effort to simply show you how levels work, okay? We're showing you how volume and levels work very, very rapidly. This is a new high. Has it been retested? You could argue yes, you could argue no. It's really close. We're not zoomed in, guys. We are on a monthly chart. Ton of volume back here. Ton of trading activity. Here's the trading activity of 2020. Here's the trading activity of January of 22. We're nowhere near it. Is there anything to fear? No. Okay, we're going to log that in our minds. On a monthly chart, we don't have any major fear. It doesn't look like we've retested. So we're going to zoom in a little bit and check that level. And we're also going to check volume. Okay, you need to check volume and levels. Now, here's the high. As you zoom in, the picture becomes clearer. Okay, broke out, almost a retest. That's a new high. That's a retest. So if you were right now looking at this, you're going to say to yourself, I mean, this is a great distance, guys. This is from 375-ish to 369, 6 points. That's a big difference, all right? So you're looking at it right now. You're saying, okay, I'm looking for downside in what's going on right now. So what we want to look volume at high watermarks next. Because if there's a ton of volume at these high water, you definitely want to come down and retest this level, which is the previous high. And just so you know, traditionally, you're not just going to stop at the actual high itself. You're probably coming into here. That's reality. And that's probably, you know, if you're looking at this on a weekly basis, that's what you're looking at. And we see a big spot, like a big piece of volume here, and it happens at a high price, right? And look what happened to price afterwards. See, I don't care if the bar is green or red. That means nothing. If you're sitting up there at a new high and you see an outrageous amount of volume on a weekly chart, that is your path. And this was not a small move down. Everybody remembers this. It took a year. You went from what, 370 down to 285 on the Dow. This is a big move. Huge, as a matter of fact, especially if you were in futures. If you got that wrong, you were toast. Let's move into a daily chart. All right. What do we see here? All right. Well, we see a high price. We see that high price revisited. And upon revisiting the high price, okay, we don't see high volume, but what we do see is a lot of really low volume. I would say the average here, notional, everybody. What do you think? Is that the average volume? I would say it is. It's probably the average volume right there. Here's the highs right here. It's below average the entire time. When does it pick up? Oh, looks like we're in a buy the dip mentality there. Now it's rallying back up. Okay. So what do we see here? Well, nothing to write home about. We're definitely, what levels are we watching though? This is important to notate, everybody. What levels are we watching right now? We're going to watch this high level here. This is important. We're also, and remember, we're very long term right now. If I go onto futures, you have to do this in seconds. You have to do this very fast. This is where you're at right now. That's the game right now, okay? The game is in through here. And then there's little miniature games going on, right? So we rallied up here, all right? But did we retest? Did we retest the previous breakout? Now we did. Now we rallied back up here to a new high. Did we retest this level? We are right now. Now we're rallying to a new high. Did we retest the level? We are right now. You see, there's miniature games the entire time too. And as you get better, you'll be able to break that down. Right now we're on a daily chart. Let's go to a 4-hour. And here we go. So there's something else that you always want to look at when you look at this stuff, and that is gaps, right? You always want to pay attention to gaps, especially on indexes. I'm just zooming in just a little bit so you can have a clear picture. So where's the game being played at the moment? Well, the game right now being played is this rally back up to this high. That's really what we want to see. And so our first point of contention is really, well, we've sort of met it. We've sort of met the first point of contention, I guess. But some heavy points to break through are going to be here and here. Those are really heavy points to break through. This is a rally up. We come back down because we're retesting. Now we come up. Now we should come back down into this area. We're in a sticky point here. So this will be a point to notate. This is a point where there should be a bounce. Okay. There should be a bounce there. And there should be a bounce there. And remember, we're just looking at a 4-hour chart. We're nowhere near evaluating futures at the moment. We're just saying, hey, this is where we should see some bounces on the Dow because we're evaluating this chart in short term. Then we come down and we look at volume. Is there any volume to speak about? No, it actually looks like volume is decreasing. So here's a low, rally to a high price, volume dropped, right? Right now, we're operating well below average in volume. Why? What was back here, right? So you kind of want to know the stories of what was back here too. So this entire area here, where is it? From May to June. May to June. This is a bunch of corporate buyback programs. Might not be the exact date. It was up to June 14th it ended. So it's right in here somewhere. And that's where most of that volume came from. If you're not familiar with corporate buybacks, you should get familiar because they create artificial demand and they create artificial price increases because the companies that own it's their stock, they are buying that stock back, which drives up the bid, drives up the price. And when that drives up, what happens? Well, that dried up on June 14th. Goldman Sachs said that was approximately 5.5 billion in daily volume. So that's important to notate. All right, so we're going to zoom in a little bit more. All right, we're getting back into that area. Remember where we said the first sticky point was right here? We should come into here. So if you were trading right now and you're on a 1-hour chart and that's your time frame, and by the way, if you're not sure what your time frame should be, again, that is because you haven't done the due diligence of paying attention to your cash management, risk management, and investment management. Are you even trading or investing in the right investments? Do you have enough cash available? Are you taking too much risk or too little risk? These are the things you have to know before you get involved. All right, let's cruise down. We're going to start breaking it down here. So we know what we're looking for now, right? Here's a gap, it filled. Here's a gap, it filled. Do we have any gaps here? Doesn't look like it. Look all right here, right? We went to a new high, retesting. Probably breaks down into this area of 390. It's quite a bit of ways, folks. That's quite a bit away. That's far from our price. I love it when I stutter over my own words. So here we are again. And so should we be buying and selling on this thing right now? Well, right now we're too far out. If we're looking at futures, right now we're too far out. But how do we evaluate it? Well, there was a lot of volume sitting right here, which drove price up. There wasn't any volume at this high. What this shows you down here, this lack of volume down here, what this shows you is a lack of demand at that price. No one wanted it. Now, as price started falling here, it started picking up steam. And that's what that high volume is. Now, as you're getting it down here, where are we? We're back at those low volume levels. Why? Because we're dipping into the previous high. Okay? That's why. Let's go down to a 5-minute chart. All right, now things are starting to make sense. Here's a big, heavy range for you, okay? This is a big, heavy range. This is where that price had taken off, if you remember. This is the volume that started pushing down. There's a lot of downward pressure on price right now. A lot of downward pressure. We're on a 3-minute chart. You can see how much pressure this applied. Look, no one is stepping in to stop price yet. No one is stepping in. So price should continue to push down. Now you're on a 1-minute chart. Look at that gap. Gaps fill, folks. If you would have seen this gap, what would you have done? You'd have waited for it to fill and then pull back down. Then it would retest the level it broke out from. That's right here. And ever since, it's pushing down, down, down. Is there any volume here to stop this down move? At the moment, no. There's no volume to stop the down movement. You are still in your trade. But if you were an experienced trader, what you're going to do, if you're short right now, as you should be, you're going to set this level. I'm going to put that at a 2 just so you can see it. You're going to set the level right there. And right here, you're getting out of your short. You're closing your short out. And right here, you're getting back into a short. Remember, you don't always have to have. You just don't. All right. So don't feel position open. Right now, you can sit. Where can this run to, everybody? Let's go back and look. Let's go back to a 15-minute chart. Where can this run to? Well, it could run all the pressure until probably here. So you have to realize when you're looking at a 15-minute chart, you're really looking at big moves, especially in futures. But you'd be looking there. Let's make that a little thinner. You'd be looking there. You'd be looking there. You'd be looking there. Now, if it broke out to the downside of all three of these, and by the way, you should be covered by then. You should cover right here. If you're still short, you should cover right here. Right? That's your move. Otherwise, if it rallies to here, you should cover again. And then you go short again here. And then you would not cover again until you came back down here. That should make some sense to you, I think, at this point. How long have we been going? About 23 minutes. Now, let's clear those. And who wants to go over and see a little futures trading? What would you actually do? Let's just go over to a little demo account, and let's take a look at what you would actually do so you can see it in real time. Oh, wait, I have to go back here. Stop the share. Sorry. I got to jump back over here so I can share the right screen with you. I was about to discuss a screen you can't see. Let's see here. Let's jump back over. Which one is it? I got this one here. All right, here we go. So as you see, I just walked away from it because why not? And it's I have two positions. They were bought in at 39,609. You would never actually do that in real life, folks. You'd walk away, but I'm willing to. It's fine with me. As you can see, I set this up the same way we just discussed. I didn't expect it to break through, so I had purchases at 39,609. This is the Dow E-mini. Now, where do I have my sells placed? Well, they're now at a high. They're at a watermark that's a bit too high. Okay, so what we want to do, let's zoom out a little bit so you can see. Zoom out a little more so you can. All right, now we'll zoom in. So as you see, these were going to be my old covers, right? So they get erased now. Why? Well, because price broke through to a level that I didn't expect to happen. But am I doubling down on positions? Am I panicking? Am I freaking out? No, not at all. Where's our next point here? So what you're going to do at this level is you're going to get out. So you'll set one to get out there. And how many positions do you have open? Come up here and take a look. 2 positions open. It's only $5 at a time, guys. So what are you going to do? You're going to come back to this exact same level. And you're going to sell out. That will close out these 2 positions. When price gets there, it'll close out these 2 positions. Now, what is the next trade you would make? Well, I mean, what you're looking at is a ton of sell pressure. We don't see a lot of buy pressure. Let's move over to a 5-minute chart. This is the actual mini. Now you're gonna. I've been doing this for a very actually this calm when I trade. Am I this calm no matter what I'm trading? I am. I always am. Okay, this for me. I have been doing this long enough. This is not a scary scenario. All right. Let me just back this up so I can show you where I set those levels. You can do them. So here we have our levels down here, right? This is where we are going to close out those positions, right? That'll close out these 2 buys because it seems now that we might be in more of a sell scenario. There's a lot of sell pressure. So where are we going to go short again? Well, where did we break out? We broke out here, but actually the breakout's kind of right here. These are searches for supply to rally higher. That rally did not work out. All right. So this is actually your breakout. If you're going to go short again, you're going to go short here. How many positions you want to go short with? 1 or 2? Right now, because this would be a $50,000 account, I like to do 2 positions at a time, right? It's just where my risk is comfortable. Now, let me tell you something. That sounds like too little to you. That's not enough. Well, I can very, very easily do $2,000 a day off a $50,000 account with 2 positions. All right. And I can walk away from it. So I don't have to sit here and stress all day over what's going on. I mean, I just made those trades on a 5-minute chart. Would it be wise to zoom into a 1-minute chart? If you want to play it that close, because let's show you how close you can play it. All you need is your breakouts, right? So right here's your level, which, by the way, is where I put those 2 trades. Really, that's your trade right now. That's all you're interested in. And you just sit and wait. Well, Derek, what if you're wrong? So you have 2 buy orders open. Where does it have to fall before you say, I am wrong? Well, it would have to fall for me to say I'm wrong with the way I operate, for me to say I'm wrong. I would need to go. I'm close to 1 point. I can tell you that. One of those is going to get I could get stopped out. I'm really close. I am really close. Hit it, but it possibly could. That's interesting. What a good question I've asked myself. The reality is you're probably looking at here as your buys, which is why I set my buy level there. To really be wrong, you're going to have to come through here. Now, is this a monstrous loss in a futures account? Well, think about it. If you have 2 contracts open, right, you're doing $10 a point. That's 100 points away. That's $1,000. It looks like I'm up. I reset my account daily. It looks like today I'm up about $2,650, right? So do you have $1,000 to lose? Yeah, I guess. I mean, would I ever let something go that far? I wouldn't. I mean, that's not me. That would make me very uncomfortable. Close out these 2 positions. Right now we're not there. I'd have to real sell pressure come in because right now I'm really comfortable where I'm sitting. I don't for me, I'm fine. I like this, you know. The volume down here at the bottom on this long drawdown bar, that's not going to be selling. That's actually going to end up being buying. I I didn't break that down as we sat here, but I want to make you sit here and stare at this. I want you to see what I'm talking about here. Let's go back to one. As you can see, you'll see me zoom in, and then I'll go to a 5 minute because I can then zoom out and let you see it. I can zoom out pretty significantly, actually. There you go. Yeah, I'm real comfortable here. I'm very, very comfortable here. I have my level. I don't want to bore you sitting here watching it. I mean, this is a 5 minute, maybe a 1 minute slightly. As you can see, this is in fact, what day trading is. I mean, this is what you do. You find your levels and then you sit. And guys that are in there pushing buy and sell all day and they're just killing themselves. You don't have to do that if you know how to read. I don't really care much about where someone else has positions either. I mean, I can see it. I can see their positions without knowing where their positions are, especially now with all the trend following going on. You have all the there's a lot of CTAs out there now trading futures for other people. So those guys, they're all trend following. Levels are all kind of at the same places. It's not really difficult to see. Maybe what I'll do is, because I don't want to make you sit here and watch this. This is it. This is what you do, by the way. So now I just sit there and wait until those levels are hit. Right now, there's nowhere near a stop for me. We're just not any now. I imagine this is going to be a pretty big day for me. I'll probably finish up another 1,200 bucks. This is an easy day for me to sit through. I usually won't trade this long. I really kept this going because I knew I was going to make this video and jump over here. Share now, but I hope that this was informative. I hope you liked it. I enjoy doing it. I enjoy showing you. If there's something that is not clear about, I'm zooming in a little bit so you can see my face. If there's something that's not clear over, based on, ask me by all means. But the most important thing here is, as I'm showing you levels, as I'm showing you volume, this is all very personal stuff. If you have not gone through with someone and done some live trading with them where they can watch your reactions and watch what you think and kind of make adjustments, and you watch them through how much money you have, what you think you can bear losing, and then your reactions to that, because it's important someone to really what gives someone like her at this stuff. It gives me insight into where your mind really is. What's going to really make you eject? What's going to make you make emotional decisions that you shouldn't be making? So I hope this was good for you. Look, if you're not following me on Twitter, there is my handle. My LinkedIn is there as well. It's just LinkedIn. I'm Honest Trader. I made that name I don't know how many millennia ago, and I'm not changing it. Some people make fun of it. Oh, honest, and they make fun, but that's a fact. That is exactly what I am. So there's my Twitter, there's my LinkedIn. I have Facebook and Instagram and all that stuff too. For those of you that are interested in one-on-ones, reach out to me. Ask me, tell me what you want to do. Let's see how I can help you. Let me see how I can help you get set up so that when you begin your life, whether it's investing, look, this is a way to hedge as well. This is a way to hedge very cheap. Look at what you're trading. It's $5 a point, everybody. If you think you're going into a nasty market, or there's indicators that you are, there's no reason to take market losses when you can cover at such an inexpensive price. This is a way to hedge. This is a way to make money. This is a way to take small accounts, turn them into big accounts. It's also a way to lose your ass if you don't know what you're doing. So keep that in mind. All right. Thank you for joining me today, everybody. Listen, remember, if you're not good up here, you're not good anywhere. You cannot solve the problem, even be happy in today if this isn't right. Okay. So make sure you're right. Make sure you're okay. If you're having a tough, you haven't failed up until now. How do I know that? Because you're still here. That's how I know. All right. Smile, fake it till you make it. Get out there and see the sun. Right. Go for a walk. Sounds so hokey and ridiculous, but believe me, These are the things that are going to make you smile every day. Put that smile on, all right? Every day above ground is a good day. And if you don't have somebody to talk to, you reach out to me. I'll talk to you. Thanks for tuning in, everybody. And I will